Fed Chair Janet Yellen gave her big speech Friday in Jackson Hole, Wyoming. So what did she say and what does it mean for the markets? Joining us now from Los Angeles is Ben Emons. He is chief economist and head of credit portfolio management at Intellectus Partners. Ben, thanks so much for being here today.
Thank you. Thank you very much for having me.
So we heard both Yellen and Fed Vice Chairman Stanley Fischer hinting that another interest rate hike could come before the end of the year. What's your reaction to the comments?
Yes, indeed. She laid open the possibility of another rate hike. There was no specific timing on that rate hike, but it was clear that she spoke the words that Stanley Fischer spoke a few days earlier. They feel the data is strong enough that they're on their way for the next rate hike. And so whether this will be in September, which, by the way, doesn't look very likely, but either in December, sometime in between that time, will be the next rate hike. And that will be then the second rate hike in 2 years.
And in your view, do you think the market is ready for another rate hike?
Well, the big question is unlike last year when they hiked rates, it had a very negative effect on markets because the dollar strengthened and the commodity markets fell, and that led to widening of credit spreads, particularly in the energy sector. And this time around, it has changed those dynamics. So the question is, how strong will the dollar become again as they hike rates? And how would that then impact the global economy? Because the Federal Reserve these days cannot really hike anymore just based upon US data. It has to focus on the global economy as well. So the dollar plays an important role.
San Francisco Fed President John Williams thinks 4% should be a good inflation target for the Fed rather than its current 2%. So do you think, is raising the inflation target even on the table at this point?
So this was notable in today's speech by Yellen that she mentioned that a 2% inflation target to be risen to, say, 4% was something that they wanted to research. It's not something they would do right now, but they wanted to research it. So it suggests that they're open to that idea to see what it really could mean for the U.S. economy in the future. The big question with that, too, though, is that what are people really expecting currently today, and how would that change their expectations if you change the target?
And how would it change expectations?
Well, what it could happen is that if people get communicated that 4% is the inflation rate they can expect rather than 2%, they would respond with it by likely increasing their savings because they want to have more money today rather than in the future, right? Because it would be worth less. In addition, there'd probably be some buying of goods, perhaps because they anticipate this inflation. But I think what a bigger effect it will have is that for global markets, the real interest rates will fall a lot because it means that if inflation were to rise higher where interest rates are today, then you're getting negative real interest rates, and that would lead to a lot of capital flows going around the world seeking for more positive real returns, and that will be quite impactful.
So in Yellen's speech today, she talked a lot about what's in the Fed's toolkit. The Fed has, of course, used things like bond buying in the past to stimulate the economy. Did Yellen indicate anything new in that toolkit?
She did suggest that the policymakers, the future policymakers, should potentially look at a broadening of the amount of assets they could buy. So that was, although that's a bit theoretical in the sense that what the Fed can buy today are treasuries and mortgages, but so that by suggesting that they should look at a broader range of assets was new, was a twist. And I think markets did respond to that. They didn't expect her to say that per se. On the other hand, she did emphasize that currently quantitative easing as well as forward guidance and interest action on reserves are really credible tools and have worked well, and they will use them again. So quite likely that quantitative easing would come back, especially when you have a recession.
And how many rate hikes do you expect before the end of the year, or do you expect any at all?
I would be in the camp of that there's a possibility of one rate hike, probably by December. It looks to me very similar as last year. We had about the same type of probability for September as well as December. December is about 50% and September is about 30%. And this of course relies on the timing of economic data as well as the presidential election. It does play a role. And so markets as well as others think that December is probably highly likely in that regard if the data stays on track. If not, then it probably will be sometime next year.
All right, Ben Emons, we'll just have to wait and see. Thank you so much for joining me today.
Thank you.
So what's your reaction to Janet Yellen's speech? Let us know what you think in the space below or on the Yahoo Finance Facebook page.